NADEC, the kingdom's farm-to-shelf platform, anchored by the state's agriculture fund, listed as 6010. In 2025, revenue set a record at 3,527,000,000 riyals. Net income came to 393 million, with a mixed note attached. 4 years ago, this company lost 285 million. The reset worked. Now it has to pay. This is the complete CFO and business report. 3 signals stand out. First, the turnaround is real, from a 285 million loss to profit and net cash. Second, read the mix. 98 million riyals of the profit is deposit yield on the rights issue cash. The operating engine earned 10.7%. Third, capex is back, deliberately. Red meat, the olive estate, and the sheep platform. The plan runs 6 actions on one road: feed procurement with real cover, premium and value-added dairy, energy and water efficiency, routes optimized to the chiller, the protein platform stage-gated, and cash discipline through the build, sequenced from 2026 to 2030. Each action has a gate before the next. The SWOT is honest. The strengths: state anchoring, net cash, and true vertical integration. The weak points: operating margin trails the headline, and returns are modest on the enlarged equity. The opportunities: the sheep platform, olive premium, and red meat. The threats: feed cycles, the chiller price war, and the water file. Michael Porter's 5 forces, drawn on farm-to-shelf dairy. Supplier power sits in feed and inputs. Buyer power is medium. Fresh brands defend the chiller. New entrants face farms, herds, and cold chain. The wall is high. Substitutes press at the value end. And rivalry is a 3-way fight. 2 giants and a challenger on the same shelf. The model is a straight line. Farms at Harat, herd, fodder, and arable. Processing plants for dairy, juice, and foods. An own cold chain to the whole kingdom. Then the brand link. NADEC, the Farm Truth brand. Dairy and juice are the core engine. Al Juf olive oil is the premium edge. And protein is the second engine being built. 4 pillars carry the operational plan. The people pillar, farm and plant talent with Agri Academies. The technology pillar, herd analytics, feed optimization, and water telemetry. The infrastructure pillar, red meat capacity, the sheep platform, and the olive press. And the digital core, routes, portals, and one data spine. Every risk carries a probability, an impact, and a named owner. Feed inflation is high, owned by the CFO and procurement. The water file is owned by sustainability, with board oversight. The 2 billion sheep platform is owned by the protein program office. That is deliberate. Governance keeps the plan honest. The board sets risk appetite and watches the register. The audit and risk committee owns controls and capex stage gates. Management delivers a monthly KPI pack, a quarterly board review, and an annual plan refresh. The context is Saudi. Food security is the national brief, and with SALIC anchoring 38%, NADEC is a policy vehicle as much as a company. Protein self-sufficiency drives the sheep platform. Against that, the dairy triangle fights for every chiller. Feed cycles set the rhythm, and farming answers to dessert water rules. The portfolio, drawn product by product. Fresh milk and laban, yogurts and sabati, yazes, cheese and butter, Al Juf olive oil, the premium local, arable grains and fodder, red meat, on shelf since 2024, and the Al Raya platform, 1 million head a year by 2030. The farm, on the shelf. Peer comparison, at live market caps. Now the like-sized contrast. NADEC sells more than Sadov Co., 3.5 billion against 3. Sadov Co. keeps more, 15.9% against 11.2. Farming is asset heavy. The answer is mix, yield, and the protein ramp. That gap is the plan. Valuation, with every assumption on screen. Risk-free, 4.45. Saudi equity premium, 5.01. Adjusted beta, 0.7. The WACC lands at 7.8%. The plan discounts to 28.4 riyals per share. The market says 15.47. Read the grid. Not one number. No buy, sell, or hold verdict, ever. 5 catalysts to watch. Red meat earns its chiller space in 2026. Al Raya ramps in 2027. The olive premium builds through 2028. A maiden payout question reaches the board by 2029. And by 2030, the operating margin does the talking. One grid, 10 years. Actuals in green, plan in blue. Revenue climbs from 2,225 million to a planned 4,809 million reals. Earnings per share builds toward 1.93, and a maiden payout enters the plan illustrative, labeled illustrative, on every panel. 5 years in one picture. Revenue climbed from 2.2 billion to a record 3.5. The margin line tells the turnaround, minus 13% in the loss year to 11.2. The share sits at its 52-week low, 1791 down to 1547. The market has not yet paid for the reset. 2 pictures explain the year. The profit mix shows 377 million reals from operations and 98 million from deposits. The plan grows the first number, and the cash picture shows operating cash of 756 million funding a 570 million build. The second engine costs money before it makes it. The transformation map is a road. 2026, red meat earns its shelf. 2027, owl rare ramps. 2028, the premium mix builds. 2029, the maiden payout question. 2030, the operating margin proven. 1 road, 5 gates. 9 numbers hold the budget up. Growth of 5.5 to 7% a year. Gross margin walking from 33.5 to 35%. Capital spending at 15% of revenue, easing to 8. Zakat and tax near 10%, and a payout near 30%. The balanced scorecard makes it accountable. EBITDA margin, 21% by 2030, owned by finance. Milk yield per cow, up 5, owned by farming operations. The owl rare ramp on stage gate plan, owned by the protein office. Every target has a cadence and a name. The 5-year plan, in numbers, revenue builds from 3,774 million to 4,809 million reals. EBITDA recovers to 21%. Earnings per share reaches 1.93. A maiden payout near 30% is modeled illustrative. All of it labeled illustrative, not guidance. The master budget allocates 2027 month by month. Ramadan begins on February 8th and the chiller empties nightly. February and March peak. Eid al-Adha is lamb season, the protein engine's biggest week. Summer holds juice high. 12 months waited the way the farm calendar and the faith calendar meet. 3 final charts close the budget. The Ramadan quarter leads the phasing. Of every 100 halalas of budget, cost of goods takes 66, and EBITDA keeps 20. Firm cash compounds to 1,510 million reals across the plan. The complete NADEC report is live at cfoinb.com. That is cfoinb.